All right, guys, so today we'll be looking at a way we can refine our entries and ensure we are able to put ourselves in a position to have an 80% win rate. If you have an 80% win rate and your risk reward ratio is asymmetric, such that your stop loss, for instance, in monetary value is, let's say, $10, and your take profits are anything above $10, say 15 or $20 or higher, that's an asymmetrical risk reward ratio. If you have an 80% win rate with an asymmetric risk reward ratio, you should win, you should grow your account, right? And that is what we would be looking at. How do we increase our win rate and put ourselves in a situation where we have smaller stop losses, right? So I'll give an analogy first, and then we'll go to the charts. Practically, some of you can see some trades I'm in and how I was able to enter almost at the turning point. I'll be explaining how I caught these trades and how you could do likewise also, right? This is an FTMO account, my Forex Fund account, I beg your pardon. So we look at how do we do this and how do we manage that with the trader psychology that is needed, right? So let's go straight to the theory, like it's our custom. So price will do either of two things. It will either trend downwards, upwards, which is trending, or it ranges in a case it isn't really going anywhere any soon. With AQZ and the AQZ mechanics, we are seeking to sell from the top edges and to buy from the bottom edge. That's what we're trying to do with AQZ. Then in a case where the market is trending, we are seeking to sell from the top edges again, but this time we look out for what I call order blocks, and we look for a return to the order block to sell, a return to the order block to sell. So there was a time I showed you guys how you could do this using weekly highs and lows. Today we'll be looking at a slightly different concept that can help you reduce your stop losses. If you want to grow your account, there are broadly two ways you can do that. Number one, you can grow your account by having high win rate. Or number two, you can grow your account by having, I don't want to call it low win rate, I'll say medium win rate, but with a high risk reward ratio. You want to do that, right? So, and AQZ helps us to achieve this 2B here, right? So what we're trying to do today is find a way of giving us even much more smaller stop loss. So your stop loss will be smaller, and then your potential risk reward ratio will be higher. That's what we're trying to do. So we're trying to mix these two together. We're trying to have a high win rate and take out this medium win rate now. Have a high win rate, then also have a high risk reward ratio. So our stop losses will be very, very small. We'll get hit maybe 20% of the time, but when it eventually goes in our direction, we'll be having high RRR, and that will play in our favor. Now, to be able to do this, I'll be introducing a concept we can easily apply to our AQZ fib. And the concept I'm going to be introducing is called a fractal. Most of us already know what a fractal looks like. I mean, it's one of the generic indicator on trading on MT4. All right. For the purpose of those who haven't used a fractal before, or perhaps haven't heard of it, permit me to use 2 minutes to just give you a brief on what fractal is. To be able to do this, I would try to draw the human palm. right? Something like that. Excuse me, the drawing might be poor, but this is an example of a human palm. I'll call this finger 1, 2, 3, 4, and 5. Right? If your palm isn't irregular, finger 3 should be the longest, right? So you notice that the tip of finger 1 and 2 is lower than the tip of finger 3, and then the tip of fingers 4 and 5 is lower than the tip of finger 3. Finger 3 then becomes our fractal point, right? So if you go to an MT4 and you turn on your fractal, you will find something like an arrow on candle number 3, delineating that the two candles pre-3 are lower and the two candles post-3 are also lower. Now, because I'm trying to sell from the top edge, I would want to sell as close to the tip of finger 3 as possible. What that does is that it helps me filter out some PCs that are not high risk. Rather, that are not high, that are high risk. It will help me filter out some PCs that are high risk, right? And then when I eventually catch any PC that is low risk, I might have the possibility of having a very wide RRR, and that plays in my favor. So you could practically lose the first 3 trades, and then you win 1, and then you're done. I'll show you guys an example of how I passed my Forex fund account last week in 3 days using something similar to this. And if possible, I could show you the account here. Right, so let's move on. Now, turn this upside down, and then you have what it looks like for you to have a low fractal. So I'll go slowly. I'll go to MT4 right now, and I'll show you what a fractal looks like on MT4, and then we'll proceed with our analogy. So I'll take this out. When you come to your indicator here and you go to insert, you go to indicators under Bill Williams, you have your fractal. So click on the fractal. For the purpose of this class, let's leave it at gray. Boom, that's your fractal there. Somebody's mic is on, so let me mute that out. Right. So I'm going to go to like 4 hours, so we get fewer fractals and you can see clearly. So here, this is candle 3, right? This is candle 3. Notice that the highs of the 2 candles pre-3 are lower, and also the ones post-3 are lower. Same thing with this. These 2 candles are lower compared to this, and then these 2 candles are lower compared to that. So that is what I'm basically looking out for, right? I want to take my short trades as close to the fractal high as possible. This is GBP JPY. You can clearly see this fractal here, right? See this fractal. Notice if you are taking your trade as close to that fractal as possible, you'd have had this massive runner, right? Sweet. Now, notice also if you had compared this fractal here, extended it, and then you waited to take your trades off here. Let's say you decide to pick your PC here or your candle of interest at that point. Again, you would have had a wonderful sell. And let's put that aside. What if you consider just this fractal high here? Again, and you have a horizontal line there, right? Notice how you also would have had that perfect small stop loss drop. This is the trade I'm in. No, I took this last week or earlier this week, rather. All right, so let's proceed. Somebody's mic is on. I'm going to temporarily mute out everybody for now, and then maybe come to times of questions we could ask, right? So I want to see my fractal points, and I want to take my trade off them. Notice this one too. Notice how price took out that fractal point and then went to the downside and took out the lower fractal and then pushed up to the upside. Now let's go back to our board. Right, so when market is trending to the downside, you want to trade in line with the trend. If you're a new trader, you want to trade in line with the trend. If you're a more experienced one, where you might be able to catch both sides. But for today, let's look at trading in line with the trend. So price is trending downwards this way. You are more particular about selling from the peaks, right? We are more particular about selling from the peaks. Usually, this peak point will coincide, usually not all of the time, with a raid on liquidity. It will coincide with a raid on liquidity. So those of you who know ICT, you call this turtle soup setups, right? That's what you're trying to do. So you're trying to look for your PC or your order block. I see several of us just marking up any bullish engulfing or bearish engulfing. Yes, it will work, but you might put yourself in a situation where you win 50% of your trades and then you lose 50% of your trade. What if you could actually win 80% and lose 20%? Wouldn't that be better? So this will help us filter out some trades that might not just do well, right? You know, and then you find you are able to sit down your hands, wait for the right trades, and take them, right? So this is, let's see if TradingView is up now. TradingView up, still turning, I don't know. Well, it seems to be coming up. It would be good for TradingView to come up so I can show this practically, right? So there's an indicator I practically use on my MT4. You can also find it on TradingView. I wanted TradingView to come up so we could do this on TradingView, else we might have to do this some other day. And I'll show you guys, let's just stay on MT4 for now and show you guys how this could be done. So I'm going to take off all of these drawings here, take off all the objects, right? And I'm going to try to call up that indicator, right? And I'll come here for the purpose of this and turn this to fractals of 240 minutes. Fractals of 240 minutes takes us to fractals of H4, right? So these are fractals of H4. Don't mind the color. The color is bright here. You could practically, you know, make your colors less offensive to the eyes. All right, so I want you to see how we play this, and we'll go check out for PCs and see how this will also play out. So I'm going to be looking at the sell side, right? So if you use order flow, you became bearish. Once this candle was formed, you became bearish, right? So let's look at the sell side. So this is a fractal high. Can you see that fractal high? That's the fractal high again. So you can understand, I'm going to put an indicator here. Again, I go back to Bill Williams and I'll turn on fractals. And I'll okay. You'll notice that there's a fractal at that point, right? So as to make my chart clean, I'm going to take out the fractal for now and just leave out the multi-time frame fractal lines. So here I am. This is a fractal point and I'm looking to sell, right? I won't be selling in between. I want to sell from the peak. I want to sell in a situation where my stop loss is as small as possible and I can catch as wide as possible pips in my favor, right? So let's magnify this a little bit more so you can see. So this is a fractal point. Again, if you understand what fractals are, this is this finger 3, this finger 1, 2, this finger 3, this finger 4, 5. Upon the 5th candle confirmation, you get a dot there, right? You get a dot indicating that this candle confirmed this fractal. If you want to sell, you sell from these fractal points, right? You could go down to lower time frame and practically look for your reasons to sell, and that's a massive sell to the downside, right? I will leave out buying from this lower fractal. Again, you saw the way it came to the low fractal and buy up. Let's leave that. The order flow is bearish, so we'll be selling in line with the order flow. Here's another fractal formed. That's the confirmation. That is the takeout of the fractal. That is your sell, right? If you go down to 15 minutes or 30 minutes, this will give you a 1:3 or a 1:4 RRR, right? Now, if you love trading order blocks, you should also trade the order blocks responsible for a fractal. So if I were to trade an order block, I'll practically measure out this region here as my order block or my AQZ, right? Depending on whichever one you want to call it. My qualifying candle, this is a bearish engulfing qualifying candle for AQZ. You can see that that candle created a fractal at the top there. So this is an order block or an AQZ qualifying candle of reference. I'm not going to use this. I'm not going to use this. I want to use this. I want to sell as, of course, the first part of the first laws they taught us while we're learning how to trade years back is that you buy low and you sell high. I want to sell as high as possible. I want price to be at its premium when I'm selling, and I want price to be at discount when I'm buying. So if you want to trade AQZ qualifying candles, you spot out AQZ qualifying candles that are responsible for fractal highs or low. You are buying and selling at low points of support and resistance. You would lose 1 or 2 trades, but eventually you catch runners, and those runners is what is going to triple, quadruple, or grow your account, as the case may be. So this is the bullish candle is my bearish engulfing candle for those of you who trade order blocks. And for those of you who trade AQZ qualifying candles, this is a bearish engulfing, which qualifies for an AQZ qualifying candle. I can tell you the fact that if you go to your, if you go to TradingView, you might find out that this coincides with the PC, right? Somebody could confirm that for me. This could coincide with the H4 PC, right? So I'm selling from this block, right? I want to sell from that. Same with this. Now let's proceed again and see some other one. Can you see this fractal high? Notice how price pierced into the fractal high, and then you begin to look for reasons to sell on lower time frame. You would have caught that perfect seller. That would have given you a 1:5, 1:6, 1:10 hour, depending on what time frame you're in. Again, we're going to look at that later on, right? So again, this is a fractal high, and this might be, well, this won't be an AQZ qualifying candle, except if you neglect the wicks. But look at these 2 fractal highs. See how price came and took out the liquidity at that point. And once price took out the liquidity, you're looking for your reason to sell, and boom, down you are. Hey, what about this that happened recently? That is a fractal high. See how price pierced that fractal again and then dropped to the downside, right? You could have razor sharp entries doing this. It might mean you have just, if you're one of those who find it difficult to multitask and then you just trade 2 or 3 or 4 pairs at max, it might mean you have fewer trades per week, maybe just 4 or 5. But if it goes your way, you could do 6, 7, 8% of your account waiting for these setups. Let's look at some other pairs. Let's look at EJ, for example. I think we'll have something similar on EJ too. Right? This practically works on every pair, guys, on every pair. And it also works when you have a ranging market. So let's start from here. See that fractal high price took it and then went to the downside, to the lower one, then went up, right? Again, took out this higher one down, took out this one down, took out this one down, and then down, right? Let's see if H4PC is up. So we'll put this together with H4PC. I just don't. All right, great. Great, we have our H4PC here. So I noticed, was it on Monday, some of us were trying to sell GJ. Let's see what happened with GJ on, was it on Monday? Yep. Right, so this was GJ. We had this, for one reason or the other, we marked, I can't remember which one now, but we marked up something like this and we're looking for reasons to sell. When it invalidated, we're looking for reasons to buy, and then it revalidated and sold, right? So the best way to have looked at this with low risk is to look at this fractal high. You see that, in fact, you have 2 fractal highs. Those are liquidity points. Again, I'll go back to the board and explain what I'm trying to derive here for you guys. When, irrespective of what you do, right? Irrespective of whether you're trading market sentiments, you're trading order blocks, you're trading commitment of traders, you're trading open interest, you're trading currency strength, irrespective of what you're trading, you want to be selling when price is high and buying when price is low. So this principle can be applied to whatever strategy you choose to do it with. All right, let's take a downtrend, for instance. If price is pushing downwards, what you would notice is that these U-turns here don't just happen arbitrarily. There would be a short-time high that will create institutional sponsorship So the market will go back to take out the stop losses or the buy stops at those short-term high, take them out and then drop. Take them out and then drop. Take them out and then drop. So what we're trying to do now is we're trying to sell together with them at these peaks. And in a case where we are buying, we're trying to buy from the troughs, somewhere there. So exactly what we're trying to do, we're trying to spot out where those liquidities will be. Now, there could be several of them line up together. We don't know which one they will eventually pick, but that is why we wait. We will wait for certain candlestick patterns on lower time frames, and then we'll take the trade. Right? So let me give you one more example. I'll use one template. I have a template here I use for this. I'll remove some of the noisy things in that template so it doesn't cause a lot of problem. Let's remove the noisy things in the template, and then we would look for reasons to sell. Right, so let's remove these noisy things here. Right, so let's call up EJ, for instance. You're trying to sell EJ because the trend is bearish on the daily, is bearish on the H4. Everything is bearish. If you're trading on the daily, where is your high probability low risk sell? At the fractal high. What did EJ do yesterday? It came straight to that fractal high. You look for your candlestick pattern and you sell. Now you know why I'm selling EJ. You could practically go to 30 minutes and see this play out, right? So I configured mine in such a way that I can see my 4 hours on my 30 minutes. So I can sit on my 30 minutes and see what is happening on 4 hours. I don't have to go to 4 hours to be looking at it. So you see price came to this 4-hour fractal. It took it out, didn't really do much. I didn't get a candlestick pattern. It came here, took out the next fractal, didn't give me a candlestick pattern, then gave me the highest point. That was the highest point. When price closed below this highest point, I took my trade for a sell, and I'm still selling right now. And like I told you guys, here it is. This is EJ, practically still selling, right? That's the entry there, below that highest candle, and EJ is still selling, right? Now, if you want to do your RRR on this, let's give it a try. I'm entering. I'm willing to be wrong as soon as possible. My AQZ fibs, right? I have my AQZ fibs, and I fib that candle. And you can give 1 or 2 room for maybe spread or whatever. This has done 1:3 and is going to 1:4. So I'm risking 10 bucks to make 40 bucks, 50 bucks, 60 bucks. That is how to trade low risk. Low risk. I understand the adrenaline and energy, that wants to make you take a trade at every point in time you want to be trading. You will win 50% of the time, and then perhaps you lose 50% of the time, but your account will not make any significant growth. You could spend 2 weeks trading and your account hasn't really grown. If you want your account to grow, you have mandatorily must seek for high yielding trades, trades with smaller stop losses and possible bigger moves. You won't catch them all of the time, but when they do come, then they pay out into your account, right? Again, practical. So let's go back to perhaps another pair. Let's check another pair. I want somebody type in a pair so that it doesn't look I'm cherry picking, and you see how this play out, right? Anybody type in any pair of your choice. Yeah, I've looked at GJ. I've looked at GJ. Oh, somebody chatted. Okay, we'll look at them. GJ, GF, Gold, EU. All right, so this is GJ. Can you see the same thing playing out in GJ, guys? Can you see the same thing playing out in GJ? Right, same thing playing out in GJ. That is a fractal high. That is our point of interest. Price came up there, tapped on it, didn't close below, pushed back higher a little, closed below, and then boom, we're in for the sell, guys. We're in for the sell at that point. Oh, mama. 1:5 risk reward ratio and still running. How about that? Okay, somebody mentioned EU. Let's go to EU. Let's go to EU. How about EU? It took out this fractal. You can see that blue line. It took out, it didn't close below it. It took out, it didn't close below it. It took out, it didn't close below it. It pushed up and then it closed below. Oh, I'm in my trade, guys. I'm in this trade right now, and you've done 1:3. Interesting, right? Superb. Somebody mentioned gold. Well, let's go look at gold. Let's go look at gold. I don't trade gold actually. Dog trades gold, Papa Pips trades gold, but this thing works like charm for every one of them. Can you see that fractal line there? Yep. Right. So let's see. Let's start with the very first one. There's one here. One there. It came, took it out, closed below. You went in, boom, you hit your stop loss. Then you just lost 1 hour. Right. Then it came back to the next fractal, took it out, and then closed below it. And then you are in this trade. And you practically would have recovered everything because this has gone to like 4 hours. Right. You recover everything you lost. Right. So let's put this, let's piece this together with AQZ H4PC, right? Again, I'm just introducing you guys. There are some small rules I use to filter them out. I might be dropping that next Thursday, but this just to whet your appetite and let you know that you can refine your entries such that you have fewer losing trades and you have fewer trades in total, really. So it will look like you're idle, but you're actually doing something good for your account. So let's come here and look for, let's hide this. Let's hide this now and look for H4PC. So I've explained 2 things so far. You want to look for an H4PC that formed the fractal high, right? Or you want to look for a bearish and a bullish engulfing candle, or you want to look for an AQZ qualifying candle that forms an edge, either a top edge or a bottom edge. That is where you want to be selling from. Right, you can also do this on 1 hour. It works on 1 hour to just that you have more trades, and then of course you get faked out more often. You could narrow down your entries down to 15 minutes and even 1 minute if you want to using this methodology. You just need to know what to do. If you're doing this on 1 minute, I'd rather you do double LSB, right? You have BTB the first time, then you have a second BTB telling you that you're going in that direction. So what you'll be seeing if you're trading on 1 minute is that it came, it broke LSB first time, LSB second time. Now you can enter at this point and put your stop loss above on 1 minute. If you don't, from my back test, if you enter just because you got a breaking structure on 1 minute, you get faked out several times. You wait for double breaking structure, it's more or less like you've created a high low, lower high, lower low scenario. Then you can get in on 1 minute, put your stop loss above the highest high, then you ride it to the downside. Sweet. Right. So if you have a H4PC, especially in a pair that is like undulating and ranging, right, you'll be happier if your H4PC forms a top edge, right? So here I give you an example of what I mean. This is a fractal top here, if you can see that, right? Because it's a fractal top and it's a H4PC, I'm willing to consider this PC, just a moment, please. I'm willing to consider this PC as something good for me to trade from. Oh, somebody's mic is on. All right, let's do this. Yep, I'm willing to consider that PC as something I want to look at. Why? It created a top edge. And by so doing, I've been able to refine my entry. I've been able to refine my entry to give me a razor sharp entry. Of course, Doug has done some of the tough job for us, telling us where precisely to get in at the PE for a drop, right? If I'm going to use any other candlestick pattern aside my H4PC, I must insist that it gives me a top edge, right? Because price will most times come and take out the liquidity at that top edge. If I'm going to use any other candlestick outside the H4PC as my candlestick of reference, it will be sweeter if it is a top edge. right? It doesn't mean you can't use any other one. You just want to reduce your losing trades as much as possible, right? So let's look at this. You don't need the indicator. With time, you begin to see it yourself where the top edges are. You can see we have a top edge here. This bearish candle is the top edge because it forms a fractal. 2 candles to the left, 2 candles to the right. That's the top edge. That is an area I want to sell from in the future if price returns there, right? If price returns there. Again, price did return, and then price is dropping, right? So again, like I said, it's refining and whetting our appetite. By next Thursday, we'll look at this even more deeper. I'll go back to MT4 and see how you could play this with some other pairs. Let me call up my symbol changer here. Right, so we could look out for some pairs today and see if we'll catch something catch a trade for today. See how neatly it took out those top edges. For those of you who trade HPLR from SimplyPips, you have your HPLR trade, took out Asia high yesterday, and boom, to the downside, right? Again, you have to have discovered your order flow from the higher time frame. If your order flow is bearish, you're selling. If your order flow is bullish, you're buying. In a ranging market, you do both. Look at the ranging market. Price came, took out the lower edge, bought. Somebody mentioned GCHEF. Yes, GCHEF gave a very wonderful setup today, this week. Very, very wonderful setup this week, and I'm sure you guys can see it. Very wonderful setup this week, guys. Notice what happened. It took out that fractal low, gave us a candlestick pattern, and then bought all the way to the top and took out that high and then sold all the way down. Let's go back to 30 minutes and you see how this practically played out. Yep, so that's it there. It took out this fractal high, closed below. We would have initiated a sell, and this would have been a losing trade because it kept going, then went higher to another fractal high, right? And then closed below, and then we took that trade. Let's see what RR it has given us. This practically has given us like 1:8, about 1:8, right? So you lost once to get that. Now, if you use our AQZ fibs to trade this, it simply means that once price closed above, this would have been invalidated, and then you'll be looking for reasons to buy, right? But I don't do that. I pick a direction using this method and stay with it, right? There are some other methods where I trade both ways, and I've explained that before. In HPLR, I could trade both ways. With this method, my bias is fixed, and I know what I'm waiting out for. So price has to come and take out my fractal at a certain time of the day. It did take it out. It closed below the highest candle. If you initiated a sell, you would have lost that trade, and it went up to the next liquidity, took them out, and then gave you your winner. Now, notice how you lost one trade and you won one trade. And if you're risking 1% of your account on both instances, you would have lost 1%, and then you would have made 8% here or 7%, as the case may be. You practically would have grown your account, right? So that's the idea I'm trying to pass across to you guys. You could go back and play around with these, ask questions in the group. I hope I have enough time to be online to interact with you guys. I want to state here that I don't know how long you've been trading, but one of the phases you pass through as a trader is a phase where you struggle with your ego. And when you see people struggling with their ego, you know they're always on Telegram talking about how they smash one TP. But their life is not the better, right? They are not growing any account. What benefit do you get making total strangers feel you're a very good trader and you can't pay your bills? Feelings don't pay bills, guys. Feelings don't pay bills. If you're trading AQZ, you're trading IOF, you're trading whatever you're trading, you don't have a trade plan, you never stick to your trade plan, you trade emotionally, You don't try to trade low risk trades. You're burning time and you're wasting energy, right? And time is actually life. Life is time measured in seconds. I want to suggest you spend less time on Telegram, right? In fact, if you discover that you are being distracted by Telegram, delete it temporarily. Write down your trade plan, stick to it, and let it work for you. Then come back and let's chat, right? So I dropped something earlier today. I said some people trade commitment of traders, COT. They trade open interest. They trade currency strength. They trade Fibonacci. They trade everything. What works for Mr. A may not work for Mr. B. Stick to what works with you. For instance, in my inner carcass, we have a tool we use to determine whether we should be bearish or bullish. And we use to determine risk off and risk on conditions in the market, right? So this is an example. We use this to determine risk off and risk on. This practically looks at the strength of JPY. So for the last 1, 2, 3, 4, 5, 6, 7 weeks, we've been selling everything JPY. It would be foolish of me to come to AQZ or any other group and tell you if you don't trade this way, you are trading a strategy that is lagging or whatever. I mean, it doesn't make sense. Trade your own, right? Make your money for yourself. And if you can show us, organize the Zoom, we'll all join and learn from you, right? We've been selling JPY like for donkey years, weeks. And if you look at what I just explained to you guys now, you see it practically playing out here, right? JPY is bearish, took out the fractal high, sell. 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 Presently, took out fractal high, sell. We've been selling for 7 weeks, guys. It's not possible for you to be selling for 7 weeks and you'll not grow your account. It's impossible. Yet, this is not a holy grail of a strategy. Hey, what about DXY? What about DXY? We practically have been buying dollar for like 1, 2, 3, 4 weeks. We bought dollar. Last week we tried selling dollar. The market has been clumsy, so the dollar has been, you know, if you're here and you've been trying to trade on lower time frame USD pairs, you notice you've been hitting stop loss pretty often. It's because the DXY is also in a limbo, right? So some traders are more sophisticated than the others. They understand how to read certain indicators. Could be commitment of traders, could be open interest, it could be sentiments. Some are still naive. They are still new. Maybe not naive, maybe new. Don't impose your methodology on them. Let them grow organically, right? Some persons can't do more than 2 things at the same time. They will get lost. Let them be and stop bullying them, right? Trade your own. Make the money for yourself. Make your family happy, right? So I'm going to show you guys what some of our friends have been doing. So I have a group of people where we look at things together. We try to trade for prop firms because we believe that it is stupidity, or permit me to say unwise, to try to make a living trading $1,000, $10,000 account when you have prop firms like FTMO or my Forex fund that will give you $100,000 or $10,000 of their own to trade, right? So here you find this was the account I was telling you that cleared my Forex fund in 3 days, practically in 3 days. That's the 3 days there, using a methodology similar to what I'm explaining to you guys here, practically AQZ on steroids, right? Yeah, we have somebody else clearing this too, right? This is a verification, not even just a challenge. And you can go through, I think I dropped some videos on YouTube. These are individuals clearing this, clearing FTMO and MFF practically every day. Now you need to go through some of the trades of these guys. The whole month, they may take just few trades. It's not the number of trades that matters. Some take just few trades. Some take their strategies, make them trade on 5 minutes, and that means they are willing to take several trades. but the trades are positioned in such a way that they eventually will make bigger wins because they are trading from the edge, which is the secret I'm trying to explain to you guys today. Trade from the edge. Try as much as possible not to get involved in trades in the middle of nowhere. Trade from the edges. Trade from the peak. And if you want to know what the peak is, it depends on the time frame. Somebody's peak may not be another person's peak. Stick with yours. These are my peaks on H4. And I'm not looking at trading any other thing until price gets there. I'm not looking at taking this bearish engulfing, even though it looks like price was selling. I'm not looking at taking it yet. It hasn't got into my peak, right? Let's see Chef JPY. Let's see Chef JPY. Say you want to buy Chef JPY. You would have gotten one buy here, and then it hit your stop loss. Then you got a second buy, and then you made back your money. It's as simple as that. Card JPY. Card JPY. Right? First sell, hit your stop loss. Second sell, recovered everything. Simple as that. You restrict yourself to key areas, right? So next week when we meet, we'll look at how to put this together with H4 AQZ, H1 AQZ. When I say AQZ, I mean prophetic candle, H4 prophetic candle, and the H1 prophetic candle, and how to streamline your trade. So I'm going to give room now for 1 or 2 questions while we quickly scan the market for opportunities using our methodology. So let's see what is happening right here. Euro JPY still dropping. NZD card still dropping. Yeah, we missed this one today. I mean, it's actually, I think I'm in AUD USD. Yep, I'm selling AUD USD there. All right, so this was HPLR trade. Again, what did price do? It came to our peak, right? Gave us a candlestick pattern and then dropped. Let's see this on H4 AQZ, H4 PC. Let's see AUD USD. If it would have given us, let's see that AUD USD. All right, so this AUD USD on H4. If you were to use the methodology I just explained to refine your entries, you won't be looking at selling from here, except of course, you are trading order blocks, right? Again, which is another methodology. So for order blocks, you would have been selling at every bullish candle is your friend. I've explained that in AQZ sessions before. You could sell from that point. But if you're looking for high probability, low risk trades on H4, you want to wait for the peaks, right? So you add your fractals on TradingView, and it tells you where to begin to look for yourself from. So you could have been looking for yourself from this green, right? Or from this green extended line, or from this. So see how this actually played out, right? You could drop your extended line there, right? So when price took it, you're looking for reasons to sell. So let's put the extended lines on these other ones here. Then we'll go down to lower time frame, practically the 30 minutes, and see how we would have taken this trade and if we would have been in any at all. All right. So if you were to use this methodology, you will not be in this trade. You might have taken this and it will practically hit your stop loss. Sorry for your loss. And then here you are, and you'll be making back your profits right about now. That doesn't say price can't shoot up. But again, you are trying to reduce your risk, right? Let me see if there are questions here. Somebody say, how do we configure the fractal? I'll explain that later, perhaps on Thursday. Bearish divergence would be a good filter. Yes, bearish divergence could be a good filter. You might want to use OSMA. I've discussed OSMA with you guys before as a tool for monitoring divergence. Some of you like using, those of you that have experience of BTMM, you might love using your TDI, and those who love naked chart, you could take out the boxer, take out the singlet, and trade it naked. Who cares? Main thing is to get pips, guys, right? All this banter over what is right or wrong, it's too childish. Can you show us a fractal indicator on trading? Yeah, the name is Fractal Alligator. That's the name, Fractal Alligator. When you go to the settings, just take out the head, right? Ensure that you go to the style, uncheck the jaw, the teeth, and the lips. Uncheck the jaw, the teeth, and the lips. That's why I say take off the head, right? The disadvantage of fractal on trading view is that you can't tell it, show me the fractal of only H4, right? Of course, there are other strategies I cover that looks at how to buy from all of these lower edges. Look at this bullish run on 30 minutes. Look at the bullish run here, right? Imagine if you were buying every time it took the fractal low, you buy. It came to the fractal low, you buy. You wait again for it to come back to a fractal low. It didn't until this time. It tapped on this fractal low and then you buy, right? If you do that, you have more win. You're able to catch the trend. But for a start, why bug yourself with so many things? Take few trades and hit it hard. Hit it very, very hard, right? So you want to do this. The disadvantage of this is that it doesn't, you can't say, show me fractal of H4. So if I go to H4, it shows me the fractals on H4. If I go to M15, it shows me the fractal on M15. And sometimes it can be very noisy. So I practically use MT4 for it because I can easily turn it off, right? So see your H4 PC here. Notice your H4 PC. Now, and I gave a condition for determining which H4 PC I have discovered from backtest. Everything I say has been backtested, guys. Everything I say has been backtested. And when I say backtest, I'm not talking about backtest of like 3 weeks. I'm talking of backtest of 2 years or 3 years, right? So data, you want to have enough data to support what you're saying. So here we have a H4 PC, right? Most of us will feed this PC and try to trade off it. I've mentioned that if the PC isn't a fractal high, I won't consider it as a high probability PC. And that was exactly what happened here. So if you come here, you would have seen something like validations, invalidations, validations, invalidations before it finally, went to the downside, right? If you have that concept at the back of your mind that you want it to be a fractal high, this PC is valid as PC, but the one you'll be looking at to sell from will be this fractal high above that PC, right? You see that fractal high above the PC? That is your point of reference you'll be looking for. Price, recording in progress. You'll be looking for price coming towards that region for you to want to sell from. And price didn't do that, then it gave you another fractal high here. So you drop down to this lower one, and price picked up that fractal high and then rolled over, right? The idea is that you want to sell as high as possible. And if price doesn't get there, let it go. If price doesn't get there, let it go. If you trade H4 PC on its own, fine, no problem. You'll get validations, invalidations, validation, invalidations, no problem. You're still going to win in the long run, right? No holy grail, I keep saying, no holy grail. Now let's quickly check. Let's see if there are more questions quickly. You can use fractal on phone, but you have to go to the stress of remembering where they are. For those somebody's mic is on, well, let's move on. For those new to SimplyPips, is the pin video a good introduction? I'm lost on the terms already. Oh boy. All right, let's chat in SimplyPips. I'll tell you what to do. Okay, that means we trade majorly on fractal points. Yes, that is the idea. Now, but don't get me wrong. Remember, I explained two things. I will trade an order block that is responsible for a fractal. If it's an order block and it's not in the middle of nowhere, it is at the top edge or the bottom edge. I want to take the highest order block or the lowest order block. That is where I know that even if I'm wrong, even if price is going to go against me, that the tendency could give me a 1:5 before it comes back and go against me, right? And if it's going to go in my favor, oh boy, it will go in my favor so well that I could do 1:8, 1:10, like that in my favor. right? You want to have that at the back of your mind. Can we use phone to trade this method? Why not? You just draw your lines on phone, right? So the last thing I'll say here before we call it a wrap, whatever strategy you trade, it must answer certain questions. And I'm going to type them out for you guys to see. It must answer certain questions. Whatever strategy you trade must answer certain questions. If it doesn't, you might not have success with it. And when I say success, I'm talking about consistency. Those of you in SimplyPips have said severally, it is not passing FTMO that is the issue. It is passing it and sustaining it enough to earn a living from it. I have lost 2 prop firm accounts this year. I lost 2 this year, and I had to go and start afresh on those ones. Of course, I have more than 1, right? But I lost 2 this year. So it isn't passing the prop firm that is the goal. It is having a system that can consistently give you 5-10% every month. So if you're trading $100,000 account and you're trading on MFF, you're making 5% every month. It means you're making 5,000 every month, and then you'll be going home with 8% of that. 80% of that would be 4,000. That gives you 4,000 in your account every single month. That is what you want to do, right? So if your strategy isn't structured in such a way that you could consistently make 5% every month, if it's such that you have so many trades and it's 50-50, your win rate is 50-50, there is the possibility statistically that the first 10 trades you take will be losers, and your edge will still be 50-50. But if you are risking 1% per trade, then now you are down 10% and you've lost the account, right? So you want to reduce your risk, you want to reduce your losing rate or increase your winning rate as much as possible. So number 1 rule for any strategy you want to trade, AQZ, OBV, whatever the name is, number 1, you must know, it must have a way of telling you what your general trend is. So it must say what your general trend is. It must tell you my general trend is bullish. That doesn't mean you can't take bearish trades for those who are, more experienced. In fact, with the method I just showed you, you could take bullish or bearish trades, but your general trend is this, and then you are skewed to trade in line with your general trend. You could use half your risk for the counter trend trades and use your full risk for the, in trend trade. Number 2, it must say what a setup is. It must tell you specifically, this is what you see, and then you assume you have a setup. Number 3, it must say when the setup is good to trade. So every setup is not tradable, right? So when you get a setup, you now need to wait for a trigger, an entry trigger, right? So it must tell you what your entry trigger is. Right? It must tell you what your entry trigger is. Number 4, it must say what your expected RRR should be. So in essence, I'm talking about exits. If you take a trade and then when it hits TP1, it's pulling back, you just quickly break even and get out, you might break even on a trade that will go for 10R. Unfortunately, you don't know when it's going to go for 10R, and you don't know when it's going to stop at 2R. So you must have a fixed way of looking at the market, right? The market is bigger than any one of what it humbles anybody. If your strategy doesn't tell you how to get out of your trade, maybe when I go in, I'll take part profit at 1R, then I'll allow the remaining to go to 2R or something. If you're just trading haphazardly, you are susceptible to trading with your emotions, and it will hurt your account seriously, right? You need to have that at the back of your mind. It must say what your expected RR should be. So in essence, these 4 things must happen, and the 4 things are wide. What your trend is must be stated. when there is a setup, it must state it. It must also state the time frame upon which this setup is happening. It must also tell you the time frame upon which your trigger must happen. It must state it. You can't leave it to chance. You have to be specific. You have to come to the market with specific things you are looking out for. Specific things. You can't call a spade a working tool. A spade has to be a spade, right? This is the way you can generate consistent profits, right? All right, so for those of you in SimplyPips and that you are new, I won't say I'm happy with what is happening there. I'm going to share, I want to share the screen of my phone briefly. Right, just a moment. Right, if you're in SimplyPips, you discover lately we haven't been dropping setups. And that's because we discover several people just love coming to look for setups. Unfortunately, we are not a setup generating group, right? That's not what we're set out to do. So what I would advise you to do is drop your own setup and have us critique it, right? In the SimplyPips team, those of us are the inner caucus. We've gotten to a point where we don't even do markups again, right? We have tools that marks up our order blocks and practically tells us when it's time to take the trades. I'm going to show you an example here now. Let me get Zoom on my device. Share the screen. All right, so I'll call up my MT4 here now. All right, so if I come here, you guys can see that, right? You notice when I was showing you on my desktop, you notice I was buying EuroChef. Why am I buying EuroChef? That's it. And this on my Forex Fund account, right? My MFF account. We have an EA. It does all the markup for us. It tells us when we should buy. It tells us very soon you soon get a setup. Look at EuroChef. Look at the beginning of December 9. There's a potential buy setup. Then later on, it came and told me this is the buy setup. Take your take profit here. Put your stop loss here. This is an EA, right? I have some other ones telling me there is a potential swing, a potential swell on sell on NZD-JPY. Why? Because it just took out previous day's high, right? I now go to NZD-JPY. I look at it and ensure it has taken out the top edge, and I decide to sell. Yesterday, there were potential sells on Euro USD that didn't play out, so we didn't sell it, right? So if you are in SimplyPips and you're waiting for us to drop charts, we have gone beyond marking up charts and dropping, right? We have EAs doing all of the hard work for us, and we just wait. The signals come to our phones, and then we trade them. If you are new and you are in SimplyPips, or perhaps you are in AQZ, drop your signals and have other people critique it. The danger in doing that anyway is that you hear different opinions. So as not to be swayed by the different opinion, you must have your own personal trade plan, right? Somebody can tell you sell because commitment of traders is telling me something, and somebody else is telling you buy because DXY is doing something. You must have your own. When I started trading, there was one guy that was always vocal on the WhatsApp group. Then it was WhatsApp. He was very vocal on WhatsApp. Later on, I got to know the guy. He didn't know me because I just joined. Later on, I got to know the guy. And can you believe that this guy later on joined my mentorship class? But he was so vocal when I joined that WhatsApp group that sometimes I get so sad that my trades are hitting stop loss and his is hitting TP. Never get bugged by anybody, right? Work on your own self, know your own trade plan and follow it. Follow these rules I gave here. Know them, follow it. Don't even follow me. I just showed you fractal now. If you leave me alone, by next week, I'll bring out something new, right? Pick one and stay with it. That's what you want to do, right? So we'll call it a wrap here, except if one or two of you have questions. Of course, I'll pause the recording here so it doesn't get too long.